Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel, and of course yesterday I went fishing. Fishing was okay, right? We saw some smooth hounds, which is good, but we had to kind of cut the trip short because the swell picked up to about 3 times what it was forecast to do. We can fish through rain, we can fish through wind, but we cannot fish through swell. So yeah, largely unsuccessful, I suppose, but happy days, right? It's nice to get away from the charts for a day. I saw a whole heap of people saying the market was crashing, and I suppose you're right. Bitcoin crashed to a level not seen since last Friday. Wholly speaking, I don't think much changed, apart from 1 or 2 charts. So as always, we'll get to the charts at the end. For now, though, there's a bunch of news circulating, and if you're new to the space, I completely understand. If you've been here for a while, let's say 2 years plus, then you probably just roll your eyes like I do when you see stuff like this. We've got over 9 billion worth of Bitcoin moved from Mt. Gox wallets as per on-chain data. Of course, whenever we see this kind of headline come up, everyone assumes, oh no, they're going to dump it all on the exchanges and sell it at market and it's going to crash the price. And maybe, right? But let's just keep looking at the chart. Let's just let the charts continue to guide us. We know our invalidation levels. We size our trades. Okay, we manage the risk. We don't use too much leverage. We never go all in and bet the farm. So until such time as this physically presents a problem by forcing the price lower, then I don't care. And I suggest you don't either. The reason I say this, the reason I'm so dismissive of this kind of news is because when we zoom out, okay, and this is a big problem, if you zoomed right in, you go, yeah, the market was crashing. Like I said, to levels not seen since Friday. When we zoom out and look at the big picture, a lot of people seem to be interpreting this differently to me. I don't want to say right or wrong, but just differently to the way I'm interpreting this. A lot of people are saying, oh, Camel, we can't get through all-time high. Camel, it's tried multiple times and it keeps getting rejected at all-time high level. And that's fine, that's true, objectively speaking. But why do I not care about this either? Because this makes perfect sense. There is no further resistance once we get through this all-time high level, okay? Once we eventually break this, whether we have to even come down significantly first and then work our way up and go, or whether it's coming in the not-too-distant future, okay? Once we get through here, where's the resistance? That's right, there isn't any. We go straight into price discovery. Historically speaking, Bitcoin does very well in price discovery, but it's not just Bitcoin, right? Anytime an asset breaks to all-time highs and enters price discovery, there is no overhead resistance. The reason it's called price discovery is because the market is trying to discover what it thinks is the correct price. So is it surprising that the absolute final point of resistance on the chart is causing some issues? No, I think it's completely unrealistic to expect us to just hot knife this and go. But eventually, once we have decided as a market that it is time to break this all-time high level, then everyone can just buy hand over fist, because there's absolutely no reason not to. There's nothing to the left to get in the way, to act as resistance. So that's the way I'm seeing this, right? This makes sense. And eventually, like I said, whether it's sooner or whether it's a bit later, I do think once we get through this level, it's only reasonable to expect major upside, big pushes for the price of Bitcoin. And so again, right, until proven otherwise, until Mt. Gox actually starts dumping Bitcoin and we see something like this on the chart, then again, I don't really care. We'll see what happens, right? One day at a time as always. Retail is still not here, at least according to the Google search term metrics. I do think there's a pretty good argument to be made for them not actually coming back at all, since most of them are significantly poorer than they were at prior all-time highs in prior Bitcoin cycles. So maybe they're not coming back at all. The absolute truth about retail is they've never mattered. They have absolutely never mattered at all. Don't make the mistake of thinking retail has to come back. They probably have to come back to buy your meme coins or your altcoins. They probably do. And certainly it would help, right? It would help force a FOMO-driven move to the upside. But there's a good argument to be made that they are actually not coming back this time. But either way, I don't think that affects Bitcoin's ability to break all-time highs and run. And at least for now, they're certainly not here. Some more news that was circulating and doing the rounds yesterday whilst I wasn't here was we saw a bunch of companies add Bitcoin to their corporate treasury. And of course, when you do this, people tend to get excited and bid the stock price up. This is probably a trend that's going to continue, at least for a while. And we even saw Metaplanet add another 250 million yens worth of Bitcoin. And then when you look at this, it kind of says to me that can all of this balance out the Mt. Gox selling, perhaps? I would think it probably does, but maybe I'm too optimistic about that. Donald Trump has asked if Bitcoin can help solve the 35 trillion US national debt problem. And the answer is yes, it can. And actually what they would need to do to fix the debt is quite simple. What they would need to do is buy up a whole heap of Bitcoin, as much as they could possibly get their hands on, and then severely debase the dollar. And in doing so, they would force the rest of the currencies around the world that don't have that world reserve status to debase their currencies. Then what we would see is acceleration of debasement for all fiat currencies. Meanwhile, America, that had stacked a huge portion of Bitcoin, could perhaps use that Bitcoin as a store of value to increase the number on their balance sheets and thus bring that debt to asset ratio back in line with what would be considered normal or reasonable. And all of this made me wonder, right? It made me wonder something that, again, is perhaps a little too optimistic, but it's certainly an interesting thought experiment at least. What if this whole BlackRock spot Bitcoin ETF stuff, the ETF holders looking to hoover up as much of the supply as they can, what if all of that is not necessarily to control or suppress the price of Bitcoin, but instead is to accumulate a lion's share of the supply before the inevitable debasement? Of course, like I said, if they do debase the dollar severely, because they are the world reserve and because they hold that special status, they can export their inflation to the rest of the world. They can force every other currency around the world to debase their currencies as well. And in doing so, if the US is the first mover, if they're the ones to have the lion's share of the Bitcoin supply via all these spot ETFs, then would they be able to fix the debt problem using Bitcoin, which of course will be trading in the multiple millions of dollars if they undergo huge rounds of global debasement? So it's an interesting idea, I think. Again, I'm not necessarily saying that this is what I think is going to happen or anything like that. Like I said as well, possibly a little optimistic from me, but it's a nice idea, I think, at least. So let me know what you think of this. And again, before you write in the comments and let me know what you think, don't be one of these people that says, yeah, well, Camel, the ETF is just a tool, right? The BlackRock's not actually buying the Bitcoin. Well, yes, they are, because BlackRock are adding their own Bitcoin trust, the iShares Spot Bitcoin ETF, to their other portfolios, to their other asset management funds. So whilst it's true that me or you or anyone else can go and buy this Spot Bitcoin ETF and get exposure to Bitcoin, and in that scenario, BlackRock are just functioning as the provider of this instrument, make no mistake about it, they are also buying their own ETFs. They are also accumulating their own positions, and it would kind of be silly, at least from my perspective, to assume they haven't been doing so all the way through this bull run and the bear market lows and the entirety of the bear market. So BlackRock probably has a much larger Bitcoin position than is currently reported. And at the same time, as I said, they continue to add to their stack as well as provide it as a trading tool to other people. Again, it makes me wonder if perhaps it's not as nefarious as people like to think. Maybe it's not about capturing it and suppressing the price. Instead, maybe this is about trying to figure out how to fix the debt problem. Speculative, I know, but again, let me know what you think in the comments below. Got a very nice fractal here. Are we about to do this? A, B, C, D, E, and then off we go, just like we did here. You can see structurally very, very similar, and it tells us to keep an open mind about seeing something like this in the not too distant future. And all of this against a backdrop, okay, of more liquidity, more QE that does not identify as QE coming to markets near us very, very soon. The US Treasury is going to initiate a buyback program from the 29th of May, which is today, of course. That means about 2 billion will flow into the economy every single week. Fresh liquidity will enter the market, which is hugely bullish for Bitcoin and crypto. I wonder if this is in response to the video I put out yesterday. I wonder if the swap line updates are not going too well and instead they know China and Japan are going to be dumping treasuries and thus they're going to buy them, right, to stimulate and keep the treasury market from imploding. As ever, okay, Bitcoin is the king of sniffing out liquidity. Is it going to do this again? Is this coming to a market near us very, very shortly? I would think it probably is. Of course, that's to be determined. But this rally okay, not just in Bitcoin, but in the stock market, continues to be the most doubted, the most hated, the most shorted rally of all time. And we can see that here. Commercial hedgers in stock index futures have established a short position around the same size of during the early weeks of the 2022 bear market. This continues to be fuel for the upside as they are forced to cover, as they are forced to throw in the towel and see capitulation to the upside. And as if all of this is not enough, okay, the ECB is largely expected to cut interest rates in June's meeting. It's also true of the Bank of England, who are largely expected to cut in June's meeting as well. And again, it feeds into this idea, doesn't it? We're going to be coming back over the weekend to do the deep dive as always, but it feeds into this idea that the market is just not ready for the rate cuts that are coming way sooner than everyone thinks. Everyone sits there and says, there's no way they're going to cut rates, right? It's an election year. They can't allow the market to crash. All of these reasons. AI is here now. It's a new paradigm, bro. But then when you look at what is actually happening, okay, what's actually happening is the ECB and the Bank of England are probably going to go next. And then that opens up the door for the US to do it shortly thereafter. Historically speaking, remember, markets top within the first two rate cuts. They can usually tolerate one or two and continue to rally, but usually by the second or third rate cut, we see markets are already in a steep decline. There's an exception to this rule. If we're cutting as part of normalization, markets can rally. And there's another nuance to this rule in that the markets can top first. The markets can top because something breaks or a black swan causes it. The markets can start to dive off of a cliff, and then we can see the central banks cut in response to try to prop this thing up or save it from falling all the way to zero. So multiple scenarios on the table. But again, when you look at the CME says no rate cuts anytime soon, right? In fact, they're even continuing to talk about sticky inflation and perhaps even another hike. But when you look at what's actually happening is the ECB and the Bank of England are next to cut rates, and thus the US is likely going to do so much sooner than everyone thinks. Using that CME probability tool, as I've said 100 times before, is really, really useful on the month of the meeting. If the probabilities are 85% plus in one favor, they're usually always correct. But here is a friendly reminder that the markets are always wrong about the Fed funds rate, okay? If we take a look here, you can see they are always pricing in something that doesn't really occur, okay? And this time is no different. The markets have no idea how to price. The markets are stuck on sticky inflation narrative. Speaking of inflation, the Fed's favorite metric for inflation is PCE, and that is coming out on Friday. So if that comes in cold, okay, against this backdrop of the Bank of England and the ECB talking about cutting rates in just a few weeks' time, one by one, the dominoes are aligning for us to see these rate cuts show up well ahead of what the average market participant thinks is possible. And of course, that has sinister implications because the stock market and Bitcoin continue to move higher. They continue to look to set their third and final angle. And we know that historically speaking, once they start to cut rates, the end is nigh for risk assets, particularly if they happen to be at the top of a blow-off top structure. The last thing I wanted to touch on before we come back and do the deep dive at the weekend, of course, I'll save all of this for the weekend deep dive, but in black, we've got existing home sales. Existing home sales tends to dive off of a cliff around 12 to 18 months before we see unemployment spike to the upside. So said a simpler way, when existing home sales collapses, we see around 12 to 18 months later a huge spike in unemployment, and that coincides with a recession. That is largely what I'm expecting to play out. Existing home sales coming off. We have started to already see this thing turn up, and that of course tells me to keep an open mind about seeing a recession in the not too distant future. I think that's why the market is wrong about rate cuts. I think the Fed and everyone else knows that this is likely the scenario that's in play, and thus they are going to be forced to cut rates against a backdrop of everyone saying no, sticky inflation, new paradigm, election year, AI here. You know the deal. Right, as ever, we'll take it one day at a time. I'll save this stuff for the deep dive or the weekend. For now, though, what is the Dixie doing? A whole heap of nothing, barely hanging on to support, daily cycle low in focus. Keep an eye out for that. The stock market finishes, well, for the S&P at least, just 1 point to the upside yesterday. So, again, hard to say that anything really happened. For now, the key thing is we're holding the prior all-time high as support, okay? Breakout, retest, looking for assumption higher. Daily cycle low, not that far away. This could well represent a half cycle low. If we can get structure like this, that would be incredibly bullish. Similar deal for the NASDAQ, okay? Still patiently waiting for that cycle low in around 20 sessions, and then it'll be looking to get to full exposure on a daily cycle low pullback. The Dow Jones has had this big sell-off, okay? But again, is it crashing or is it just perfectly retesting the second angle of support? So far, of course, it's perfectly retesting the second angle. So long and strong there. We'll see what happens. If it starts to break down, then I will be wanting to get out of the way of these positions. Oil, you can see my instincts and experience were telling me that it's got to run some stops first. That's why I haven't entered the short. And I think this is probably it. So like I said, we trap a bunch of shorts to the downside. Now we got to run all their stops, and then we will come back down and enter the short at some point. So it's probably not too far away now. This is what I wanted to see. Okay, run everyone's stops and then a rollover and go. And that's why we're looking to short oil. Gold is not looking the best, is it? Looking like a breakdown or retest resumption. All the while we're above this low, then I think I can stay in the trade. But if we start to lose this low, then it might be a case of getting out the way and locking in the profit, because this is probably the top for the weekly cycle if we continue to move down. So for now, I'm happy to give it a little bit of space. Same with silver, right? Breakout, retest, looking for that resumption, but so far needs to get above these highs from back here to actually call this a confirmed resumption. And Bitcoin, like I said, crashed to levels not seen since Friday a few days back. So what else can I really say about it, right? Nothing has changed. Nothing has changed at all in many, many days, in a week and a half. So it could still go either way. We could be working on something like this, perhaps, or this. And equally, we could need to roll over from here, waste another 30 odd days into that cycle low, and then out of there we will have a shot at figuring out what is actually going on. For now though, it's impossible to say. Nobody really knows, up or down or sideways. Anything and everything is on the table. So overall, okay, as you can see, not really a great deal has changed. We'll keep taking it one day at a time. We'll keep staying on the right side as best we can. And until tomorrow's episode, take care from me. All the best. Cheers. Bye.